All right, so the battlefield, I believe, has been set, and some of the generals have started to move into position now. It looks like we're on for all-out war here. We're going to talk about that today between the banks and crypto. My name is Paul Barron. Welcome back into Tech Path. You guys know we've been talking about this for months on end, the issue with traditional finance and where the potential of future finance is going to go. And I think now we're starting to see the actual cases begin to become somewhat of an actual format that's starting to showcase what the potential impact could be and maybe what the intent is going to be. We'll start with Silvergate issuing their issues continues, obviously with the bank potentially closing its, well, now closing its crypto payments network, but maybe potentially closing Silvergate. We'll see how this plays into it. Obviously, this is one of the scenarios that is going to affect most of the exchanges, many of those of which have already started to look for alternative options out there when it comes to settlements and being able to just move money in and out. This is one of those things that I think we'll continue to see an effect. And if you look at Silvergate, the exchange network right now, this is the volume of transfers. And you can kind of see all the way back into 2019, and then right here, the 2021 high. And then here's that decline that we started to see. And of course, this has been one of the challenges that has faced with Silvergate. Now, granted, these are, when you look at the transaction level and the amount of opportunity that Silvergate has been underway and had the ability to at least get access to, you would think that this bank would stay around. Now, the regulatory components that play into this, more importantly, I think these are just some of the bad decisions that banks in general make. All banks do it. All traditional banks do it. In many cases, though, the media doesn't talk about it, and I'll explain that in a second. We've got some news coming in here on TD Bank. Here was Guy over at Coin Bureau. He simply said, if Silvergate really does go under, which I think it will provide the perfect excuse for politicians and regulators to claim that crypto systematically threatened the traditional finance system in some way. That's all they need is an example. And that is, I would agree with Guy to a certain extent. I also believe that there's going to be a scenario that I think is starting to play out here in the United States where a major entity will step in and do something within the crypto markets because they're somewhat wiping the floor with a pathway for how this whole idea of Operation Choke Point could actually play out here in the United States, especially around not only stablecoins, but also around the exchanges and what that might look like. Europe has had a little bit of play in this area, but it hasn't been as strict as what we've seen here in the United States. The concern, obviously, for that is what does this do to the rest of the industry? So cutting off access to the to USD for crypto firms is a deliberate matrix port here in this article. Interesting stuff. I want to highlight a couple of points here. Let me zoom up on this for you guys. First crypto platform to succumb was Binance exchange, which announced it would no longer be able to handle USD transfers. Now, another exchange has followed suit. Bybit also revealed over the weekend that it'll be pausing USD transfers on the platform from March 10th. That's both in and out, so that's a problem. These could be intentional to reduce the access to US dollars for crypto companies. The report also points to 3 events as possible evidence of this cutoff, which has already been caused by prices of cryptocurrency to go down. We saw the liquidity event last week. We talked a lot about that, not only on sentiment that was hitting the market, and we're starting to see more of that now. The question is, what kind of volatility we see in the overall markets as we go further. Volume of Bitcoin since then is already down around 50%. This is a big deal. For this reason, there could be more decline in prices to come. Thielen also reasons pointing to the decline in the bullish sentiment among investors, and this, of course, goes in line with what we've talked about here. We did a big video over the weekend over on Substack on our Diamond Circle that went through this exact scenario, showed the process of how sentiment kind of tracked against that, what we were seeing there, and we've got some additional content coming out this week based on that very issue, and that is that sentiment is starting to become a very big factor on how these markets are playing out. Here was John Fraser basically kind of going in on the Operation Choke Point, the update. We used to have 4 banks in the U.S. happy to serve crypto. Now we're down to 1. So this is a problem, guys, and I would like to know from you. Drop some comments or some questions in over on the side. First of all, have you been affected? Have you been able to deal with these ins and outs from your US dollars, or are you already so liquid in the system that you aren't necessarily affected right now? That's the question for how this plays into it. I think this also will start to narrow the gap on what exchanges, and it's kind of like choke point. When you start narrowing the gap down to one entity or two entities as being the ones that you have to be able to go do a deal with, Coinbase most likely will be the one, and the likelihood of them going head to head. Of course, Brian Armstrong has talked about this many times as he says he's on the side of the crypto investor, and obviously if he has to be with his business at pretty much on the point of, if he doesn't win this in terms of defense against the traditional banking system, where does he go? That's going to be the question mark that really I think a lot of people are asking. Wolf of Wall Street basically says, hey, listen, crypto's number one bank, Silvergate, goes down. Forbes put out a unsubstantiated FUD article on Binance. Wall Street Journal releases negative piece on Tether. This is all this week, and then you have all of these USDs essentially being halted in many of the internationals. Now, where I think this goes, and back to that happening, this was Bybit now saying, hey, they're going to introduce a MasterCard-powered debit card. This was just days after they basically said, hey, we're going to halt the USD transfers. But again, where I think this is going is we're going to see some sort of international bank come into the fray and possibly play into what the future of crypto looks like. The challenge is that here in the United States, are we potentially seeing the traditional finance system making way for a potential entry into crypto? Because this essentially, when you look at what the SEC has been able to do, the Feds, when I say the Fed, meaning the Federal Reserve, and how they approve and disapprove. We did a whole breakdown on this on Caitlin Long's bank I think it was last Thursday. Go check that video out because it was the Silvergate topic. And we got into that. The point being is that even they are starting to guide what banks and what entities can start to play into this. This means fees to you guys, the investors. It also means that we're going to see a lot more restrictive scenarios playing out in terms of yields. Because if banks get into this, you're not going to see the kind of yields that you're seeing within some of these scenarios, whether it's like Coinbase or even if you look over at Robinhood at paying 4+ right now. But all of this, I think, plays into one big factor, and that is that they're not going to slow this down from a global aspect, and that these companies are going to figure out a way to innovate, because that's what innovators do, and they're going to essentially leave the United States behind. This is the biggest challenge to me that I think we face overall. Kraken, which is our show sponsor today, here's a good example. Crypto exchange Kraken announces plans to launch its own bank. I wouldn't put this back by Coinbase. I could see this potentially being something even more impactful to even say a Robinhood. The likelihood is Binance may change the way they enter the United States market under Binance US, and maybe even other platforms like Gemini could play into this strategy-wise. Do we get an alliance between all of these and we create something that is more of an industry financial solution? All of this could be on the table over the next few months and maybe over the next year. Here was a very interesting scenario that played out here. And this is TD Bank, which agreed to pay a $1.2 billion fine yesterday to settle a lawsuit around them being involved in facilitating R. Allen Stanford's $7 billion, that's $7 billion scheme in 2012. Now this guy, now I don't know what the value of $7 billion in 2012 would be today, but think about that. First of all, this is 11 years ago. This is clearly a scheme that was probably in essence about double the value of FTX, just from one bank and just from one individual within the bank. And then they go out and fine TD Bank $1.2 billion in this. And what's the deal? You don't see this anywhere in mainstream media. You don't see any of this happening out there. And this guy was convicted of fraud, money laundering charges. Sounds familiar? And then Stanford is obviously currently serving a 110-year sentence right now, all because of this $7 billion Ponzi scheme that basically nobody knows about. That's the problem that I think the traditional system has, is not a problem. They control what's being, in essence, within the media, within the narrative, and it also starts to push more into that choke point scenario that is playing into how crypto and blockchain will be going. Here was another tweet, pretty much sums it up right now. TD Bank Ponzi scheme, but crypto is bad because of SBF. And we already have seen this. I just watched a debate between Kevin O'Leary and I think it was the Daily host, and the sum was pretty simple. What O'Leary, and I'm not an O'Leary fan, but I was on O'Leary's side in this debate, and it was pretty simple. He was simply saying, listen, there's going to be bad investments, and that was one of them. And remember, FTX was a startup. Yes, they did bad things. Yes, there's a lot of operators that could choose to go that way, but for the most part, entrepreneurs in this space go the other way. And I think that's the challenge, is that in the financial side of things, we just don't know how many bad actors are there. Here's Bank of America accused of misleading small business owners into taking out PPP loans. These were PPP loans that you didn't get forgiven. Right here. A third of Bank of America lawsuits filed by 3 small businesses argues the company misled them into taking out pandemic era paycheck protection loans that the government would not forgive. This is as low as it gets, guys. And these are the kind of antics that happen all the time in these big banks. This is not something new. If you've gone in and tried to do anything with a major bank in terms of a big withdrawal, you're going through hoops and hoops and hoops. This system is rigged. How do I know it's rigged? Because I use it. That's a joke. Anyway, if you guys listen to that, it came from Mr. Trump, of course. All right, Zelle was the other one that came into this in terms of the foray. And this is Zelle's fraud case explodes customers who lose millions. I want you to look at the numbers here. I highlighted a section here. In the past 18 months, consumers reported, get this, 192,000 fraud cases worth collectively $213 million in losses, 200,000 reports so far. These are 4 banks, 4 of the major banks reimbursed 3,500 cases. I mean, these are the kind of things that are happening out there on everyday people that are using this financial system that are just basically taking it in their teeth and not moving to what should be the system of, I think, selection, which is going to be blockchain and crypto. Bitcoin all the way. Fed now aims to provide and avoid Zelle-type fraud. We'll see how this goes. I think, if Elizabeth Warren has her way, she might actually make something happen here. But again, this is just going to be another fine, another slap on the hand, a $1.2 billion slap on the hand for a company like Bank of America, Wells Fargo, TD, all these major banks that are out there. I'd love to know, have you guys had any kind of challenges with your own banking, especially when you're dealing with crypto, being able to transfer in and out? Curious how that has been able to deal with it. And also, how are you moving dollars into the system right now? What's the process? Because if you can choke point that liquidity, do you choke point the potential of the market to be able to truly grow? Obviously, that would cut off the exchanges. It would cut off most of the traders and eventually the international platforms like Bybit, et cetera, that are going to play into this. Love to get you to give me your input on that. Institutional investors now are looking beyond Bitcoin and ETH. This is another scenario that plays into it. You've got Coinbase basically talking about nearly half of all institutional flows right now on Coinbase are directed toward assets other than Bitcoin and ETH. Very interesting. This starts to move also more into a much more international effect. In terms of flows, 55% of institutional clients continue to bet on Bitcoin and ETH, while the rest are continuing to believe in altcoins. Big deal here. I think what people don't realize is the seasonality, weaker period, a lot of risk assets, because we're in kind of in that in-between period where people have their, their bonus payments, et cetera, and 401ks, et cetera, playing into this. And it's also, a lot of this is checks being cut for tax season, which is going to generate, more of this free money kind of approach. Not that that's free money. But Yusko, which is Mark Yusko, has been on our show before. He believes that Bitcoin could soon be entering a new bull market. And he thinks crypto spring is mostly a range-bound price action. I still believe we're quite a way away from that, mainly because of what we've seen with the macro effect on the market, but more importantly, the sentiment playing into this right now. And this is seasoned I think investors and seasoned crypto people who are now looking at their first time where they've really seen this process of expansion and major contraction in an industry like what we're dealing with here. He did say this, it's important to note that Bitcoin and Ethereum continue to be the primary focus for institutional investors. This is back to the Coinbase report. So I think it's fine. I think we're in a space right now where when you remove these kinds of scenarios, innovation on a global scale prevails. And there will be a solution that basically follows in and essentially outflanks the U.S. banking system, possibly outflanking the U.S. innovation around blockchain. That to me is the biggest crime that's taking place right now, is the fact that we could be losing innovation in a very valuable time and critical point in the development. If you can imagine that Asia had a chance to get the internet prior to the United States, in the essence of what happened in Silicon Valley when the boom of .com really became a thing. That is a question mark that we're dealing with right now, what we're answering really literally within the pages of almost every news story out there. Ripple survey says overwhelmingly that 97% of payments firms believe that crypto could facilitate faster payments. This is nothing new. This is something we know, you know, but for most people coming into crypto for the first time, they're looking at this and saying, my gosh, this is a dumpster fire. What's going on here? And then occasionally you'll see a bright light that is validating what we already know, and that is that the rest of the world is leaving us behind, at least here in the United States. So it's a problem. Nearly every surveyed leader, 97% believe blockchain technology and crypto will have a significant or very significant role enabling faster payments. Nearly 90% surveyed said that cost improvements related to international payments, and 75% expect domestic cost benefits. 100%, of course, thinks that crypto and blockchain offer benefits and payments. So it's not that the U.S. is going to get out of this business. That's not the case. They're just trying to structure the rails so that it is their buddies who are running the business and not a bunch of innovators and creators that are building the space. So let's just kind of hold my beer, let us take over the business as it goes, and that's where choke point comes in to play. This is a good thread right here from WebEth. New Ethereum account abstract EIP. We know this one's going live here with 4337. No seed phrases. Big one right there. Two-factor authentication. I like face and fingerprint signing. That's going to be another nice one. But right there, wallets are going to become bank accounts without needing trust. This, to me, is the biggest part of where this Ethereum abstract is going to potentially roll out to. Huge for the potential of maybe just leapfrogging the financial system. Does this accelerate? Would love to get your feedback. If you could take your money, if you had enough way to be able to inject out of and put it into a system like this, into a wallet, would you trust it? Would you go that route and try to forego the traditional banking system? I'd love to get your feedback and your comments down below. Make sure and smash the like button. Get a few likes in there. We'll, if we got enough, we'll do some questions at the end. Try to get into some of that as well. Last up here, I want to play this one clip right here. Let me make sure that we've got that one. Yeah. All right. So this is Augustin Carstens. He's the head of the Bank for International Settlements. And he basically says this is all going to be eventually evolved. Let me play this clip for you guys.
Years ago, crypto assets and cryptocurrencies were in a way put as an alternative to fiat money. I think that battle has been won. Technology doesn't make for trusted money. Only the legal historical infrastructure behind central banks give credibility. So it has now become an alternative or an activity, a financial activity that could exist under certain conditions.
All right, so there you see it. I mean, they see it. Crypto assets and trade. Let me pause that. Crypto assets and trade will only exist under certain conditions. The only trusted digital currency will be the government CBDCs. It's always going to be in their next big play. And I think this also plays into that whole thing. We had one other article that I wanted to showcase to you guys because this is kind of an interesting one. Let me see if I can pull it up. Looks like it's this one right here. Let me pop this up real quick. Hang on one second. I'll drop that down and we'll go to this one right here. All right, so this was the crypto banking firm BCB, which prepares US dollar payments to plug this whole Silvergate scenario. So the gap is already in play, and this is their CEO basically saying we hope to have a dollar to fiat to crypto rails in place and ready to go live early in the second quarter. That's just literally 30 days away. So again, this is just going to be one of the few, or many, I should say, that will start to move in this space. There's just too much money on the ground that potentially these traditional banks have left behind. Now, granted, a lot of these problems occur because of bad decisions of things like Silvergate and what they've done. But that is the play out that we're dealing with right now in terms of validating what's going to happen in this next bull run and also what's going to happen in crypto in general. So very interesting things happening right now. Do not trust the banks, guys. It is not something that we do very often. All right, let's go to the poll real quick and take a look at what we got. Okay, who wins custody of grandma's crypto? Self-custody wallets gonna get grandma's crypto? That's only if grandkids are helping to put it in there, I think. I don't think so. I think it's gonna be, I'm gonna flip on that side. I think I would say it's gonna be major banks get the custody of, the Gen Xers, the boomers, for the most part. They just don't have the trust mechanism in place. And until we see a trust mechanism to come in place, even though that it's really not trust, I mean, let's just admit it. Fiat is a scam, always has been, always will be, and the only way around that is, you're dealing with a whole system that has been rigged for so long that most people don't even understand that it's rigged. So they're just dancing to the tune until we see the next generation of smart people come into the reality. And I think that's where Zoomers and millennials do change the landscape in the future of finance. All right, a few questions we'll get to. What's your thought on Strike? It's been great for quick deployment of dry powder as well as super easy to move Bitcoin and other hot cold wallets. Strike is amazing. I mean, Jack Mallers is one of the top minds out there in terms of what the potentials are. We've already seen the use case in El Salvador. We're going to see more of that. And also the Lightning Network, I think, also plays into this in where the development opportunities could really come into play quickly. We'll probably see some solutions come out of that as well. Okay, let's see here. In your opinion, why do so many? Okay, Jesus. In your opinion, why do so many people do not like ADA? Development speed. I think that's really it. It's just development speed. Everything moves so fast in layer ones, layer twos, Web 3, and they're just not there. Crypto Bureau says, Kathy Wood said digital wallets are on our radar for the next 10 years. Totally agree. She is right. This is where it's going. We are going to see a revolution in the banking system in our lifetime, guys. You're going to get a chance to see something that most people don't get a chance to see. That's pretty cool. Once in a generation. PayPal, Fidelity, Robinhood, all advertising crypto services. Yes, that's for sure, Jen. I think it's companies with one foot in traditional and one foot in the future. You are correct. That's my point. You look at these traditional, PayPal is traditional finance, guys. So is Fidelity. So is Robinhood, really. Coinbase, I would say, yes, they're going to have to come up to the table and belly up with what is going on with the SEC, but they're going to get there. And I think at some point, it's just a matter of what deal do they strike. Leave your keys to your kids, for sure. I like that one, Brian. Who are the people that are going to buy the $1 million PTC? This is a good one, Skinny Pete. I think it's going to be your next door neighbor. Because the value of assets, it's like who would be the person that bought, Apple at its prime? Who would be the person that bought any asset at its prime of where the value is? The difference is when you start to see the value of institutional finance and the major banks moving into this, the potential. Now, will it get to $1 million? I still am questioning. I know Kathy Woods is called for that. There's many other analysts. I'm still skeptical as to whether or not we ever see $1 million Bitcoin. Just don't know, but the potential is at least there. I definitely don't see us in terms of valuation of the US dollar appreciating in value. I think that's going to be a declining asset from here on out. So definitely. Okay, I'm not going to say that. Let's see here. Who gets the 1.2 billion? That's most likely the feds, so U.S. Department of Justice, most likely. Hong Kong thinks, well, that's so they can, build out their cybercrime division, track you guys down. Here we go, Skinny Pete. Hong Kong thanks to America for this. Yes, they love it. Think about this also, China. China's sitting there, just sitting here going, this is good for us. All this stuff, this is good for us. The war in Ukraine is good for us because the U.S. is deploying assets at our breakneck pace. They're not messing with us. They're over there messing with their crypto markets. We're just subtly moving in here one step at a time, opening up Hong Kong. Asia becomes a power play. All of the innovation is happening there, and then you get adoption from that community, and then you have a global reserve system that starts to separate from the rest of the world, including what the US dollar has done. What does that look like? Infinite wisdom, we need Binance to open crypto banks and handle the money directly. That would be a very interesting play. Getting a banking license, though, is the problem. That I don't think the feds will ever do it, the Federal Reserve, which controls how the banking system works within the United States. So I don't necessarily see that is necessarily a scenario. Go back and listen to our video on Caitlin Long's Custodia Bank and why they denied them. Because they were going through it the normal way. Now, you could go out and acquire a bank that's already had that, but then you'd still be dealing with a scenario of having to keep that banking license available. So, not sure. Definitely. All right. Listen, guys, if you're not already in our Diamond Circle, make sure and get in now. We do additional podcasts over there. We drop additional analysis on the CPI. We do additional content over there. All of that over there on the Diamond Circle. You can use our link down below, or you can go to our pbn3.substack. You'll find us there. And of course, if you guys want to catch me, it's out there on Twitter @Paul Barron. We'll catch you next time right here on TechBat.